Something very interesting happened this week with one of my stocks. The Initiates Plc, TIP, just announced an 89% surge in profits, nearly doubled their money. They declared their first ever interim dividends and wiped out all their long-term debts. And then the stock dropped 17% from 33.95 naira to 28 naira. Now, if you are holding TIP shares like I am, you might be confused, maybe even worried. How does a company announces one of the best financial results in its history and watch its shares drop? Today, I'm going to explain exactly what happened. It's a concept called shares dilution, and understanding it will make you a fundamentally better investor. I am Victoria Abioye, money, mindset, and life. Let's get into it. First, a quick recap on my TIP shares journey for anyone who missed my earlier videos. I bought TIP shares during their public offer at 9 naira 50 kobo. The shares were allocated after about 5 to 6 months, and by the time they appeared on my portfolio, the price had already climbed to about over 20 naira. A few weeks ago, excitement got the better part of me, and I bought more shares at 37 naira. And then the price dipped, and I had to average down at 25 naira. Last week, TIP hit 33 naira 95 kobo before dropping back to 28 naira. So even at 28 naira, my original shares bought at 9 naira 50 kobo are still sitting at nearly 195% profits. But that 17% drop last week, it taught me something very important, and I want to share with you. Let me tell you something TIP actually announced in their half-year 2026 results. Revenue doubled, hitting 6.95 billion naira. Profits after tax surged 89% from 926 million naira to 1.75 billion naira. Total assets grew by 276%. Total equity exploded by 423%. And they eliminated all their long-term debts completely. Oh, they declared an interim dividend of 0.20 naira per share. The first interim dividend they have ever paid. By every measure, the Initiates Plc shares is performing exceptionally. This is a company firing on all cylinders. So why did the price drop? 3 reasons. There's a well-known pattern in investing called buy the rumor, sell the news. When great results are expected, investors buy ahead of the announcements, pushing the price up. TIP had already climbed 111% year to date before these announcements. When the results actually drop, even if they are excellent, short-term traders used that moment to sell and take their profits. The good news became the exit signal for people who were never in it for the long term. This is not a reflection of the company's health. It's just how markets behave. Reason 2, market-wide pressure. TIP's dip didn't happen in isolation. The broader NGX experienced widespread profit taking in the final week of July, with over 648 billion naira wiped from investors' wealth in single sessions. When the whole market sells off, even the best performing stocks feels the pressure, and TIP was caught in that wave. Reason 3, and the most important one, the dilution paradox. Remember TIP public offer and right issue? The one I participated in at 9 naira 50 kobo per shares. When TIP ran that capital raise, they issued over 1.1 billion naira shares into the market. Now here's where it gets interesting. TIP total profit grew by 89%. Brilliant, impressive, real growth, right? But the number of shares outstanding also grew dramatically because all those new shares are issued. So when you divide the profits by the much larger number of shares, the earnings per shares actually dropped from 1 naira 4 kobo per shares in H1 2025 down to 0.88 naira per share in H1 2026, a 15.75% drop in earnings per shares, despite an 89% jump in total profits. Think of it like a pizza. The pizza got bigger, 89% bigger, but TIP invited over 1 billion extra guests to the table. So each person's slice actually got smaller. That is share dilution. Investors who track a metric called price to earning, the PE ratio, reacted to the lower earnings per share by repricing the stock downward to 28 naira, mathematically adjusting for the dilution. This is not a sign that TIP is falling. It is a temporal mathematical adjustment as the market recalibrates to account for the new share counts. So what does all of this mean for me as a shareholder? And what am I actually going to do? I am not selling. And here is why. The fundamentals of this company are stronger than they have ever been. Zero long-term debts, Revenue doubled, profits nearly doubled, assets growing, first ever interim dividend paid. The share that caused the EPS drop was the direct result of the capital raise, the same capital raise that funded the growth. That money went into expanding infrastructure, clearing debts, and building the business long term, short term pain for a long term gain. As TIP profit continues to grow and the share count stabilizes, the earnings per share will recover and the price will reflect that. For long-term investors, a fundamentally strong, debt-free company temporarily trading at a discount because of a mathematical recalibration is not a red flag. It might actually be a buying window. I'm not telling you to buy. This is not a financial advice, but I'm telling you what I see and what I personally plan to do with my own shares. The stock market is full of moments that look scary on the surface, but make complete sense once you understand what is actually happening underneath. An 89% surge profit causing a 17% price drop sounds like madness. But once you understand sell the news, market-wide correction, share dilution, it makes perfect sense. This is why financial education matters. Not so you can predict the market. Nobody can do that. But so you don't panic when something like this happens to your portfolio. Knowledge protects your money. That's what I'm here for. Drop a comment below. Do you hold TIP shares? How are you feeling about this dip? Are you holding, buying more, or selling? Let's talk about it. Share this video with any TIP shareholder who might be confused or worried. Send it to them today. Subscribe if you haven't already. Follow me everywhere at the Victoria Abioye. I'll see you in the next video. Let's keep building together.